Hey champ, today I want to let you know how Warren Buffett, the most successful investor in our generation, built his investment empire from a middle-class background. Now, Warren Buffett is a legendary investor that loves investing in stocks. And he loves investing in stocks because of their potential for growth. He focuses on companies with strong fundamentals and prefers a buy and hold strategy. His approach centers around understanding companies' intrinsic value and sticking with what he knows best. So let's start with the really fundamental basics about the benefits of investing in stocks and why Buffett loves these benefits. There's a few benefits to investing in stocks. First, there's the potential for growth. As they grow, their value grows. And why is that? Essentially, as companies grow revenues and they have more customers, they increase their income, they increase their sales, the value of the overall company will also grow. Essentially, as a company expands and grows, they should be able to generate more income and more revenue. And the company can also reinvest that income back into themselves so they can use that invested capital to grow their business. Warren Buffett likes the potential for growth because, as he says, the stock market is designed to transfer money from the active investor to the patient. So with his strategy of buying and holding, he, rather than trading stocks in the short term, he buys and holds stocks for the long term and minimize transaction costs. Another benefit is dividend income and distributions that you can receive from investing in a business. So as businesses grow, you also expect your dividend income to increase. But some companies don't pay dividend income. It's better off for them to reinvest that capital back into the business so that they can invest in the business and grow the business. So if they want to increase their production or to increase sales, hire more staff, expand their business, that's some of the reasons why, rather than giving out income, it's better off for the business to distribute the income back into the business to help it grow. But also there is a potential for more mature businesses to also increase income paid out. So as their revenue increases, their dividend that they'll pay out to investors can also grow. Another benefit is portfolio diversification, and Warren Buffett loves this because, as he says, diversification is protection against ignorance. With diversification, essentially, if you invest in different types of businesses in different industries, or businesses in different sectors, a different business cycle, so they could be either a new business or an established business or a more mature business, these businesses will have different aspects to them. So what do I mean? So essentially, with these businesses, since they're in different industries or a different part of their life cycle, some could be really growing and expanding quickly and wanting to grow because they're at a newer or smaller stage at present. But more established businesses have probably more durable income and revenues because they already have an established customer base or distribution base. They would have more stable income. And then obviously in different sectors, so a tech sector is in heavy growth, but then in defensive consumer sector, such as a supermarket, that's well more established, and that wouldn't grow as quickly, but that have more established revenues and income. So by investing in these different type of businesses, you'll be able to reduce fluctuations or volatility in your income that you receive and in your return. So by diversifying, you'll reduce risk overall because you're not reliant on one type of investment. Another advantage for investing in stocks is a hedge against inflation. With businesses, why they're a really good hedge against inflation is because if they're a good business, they should be able to pass on their costs back to consumers. They have really good ability to increase price and not reduce demand. But at the same time, they can maintain their margins and their profitability. So their revenue minus expenses, that's their margin. If they're really good businesses, they should be able to maintain a strong margin. If they've got well-established business, good brand, good relationship with customers, and customers understand if prices need to increase, that they're willing to pay for these increases because they perceive their products as really good value at the price that they pay. By investing in these type of businesses, which Warren Buffett likes, you'll have a good hedge against inflation. Another advantage for investing in stocks, particularly in the public market, is that there's liquidity. So by investing in a stock in, say, the S&P 500, if you invest in individual stocks, you should be able to get your money quite quickly if you need to. The top 500 stocks in the S&P 500 would have really high liquidity because they're very highly traded and very widely held by individuals, businesses, institutions. And so if you need the option to have your money quickly, by investing in a public company, you'll be able to essentially get your money back quickly. And why that's an advantage is, say, if you invest in a different asset class, like say property, that will take you a long time, probably months, weeks and months, to get your money back if you needed to get all your capital back at once. But if you invested in stocks, so it could take you just within the week, and then settlement is a few days, just to get your money back if you needed to. So what we mean by liquidity, essentially you can get your capital back that you invested very quickly in public markets. And another benefit is by investing in stocks, you'll have ownership in companies and you'll be able to vote and make decisions on the management strategy and the direction of the company. You're really into certain businesses and you want to influence the direction. If you hold enough stocks and you have enough voting share power, you can really influence who's on the board, who makes decisions in the company, and the strategic direction of the company. If you want to change direction or support a company in a specific way by owning voting stocks, you can really influence that company and change the direction for how you think is best for the company. And Warren Buffett actually does that. He owns companies, and then he could potentially be an activist investor and move the company in a particular direction by owning a large portion of their shares. That's just really basic fundamentals of the benefits of investing in stocks. So just to recap, there's the potential for growth and dividend income to increase, and also portfolio diversification. It's a good hedge against inflation. You can get some liquidity benefits, and also you have ownership in companies and you'll be able to affect their direction. Warren Buffett is all about value investing, and he focuses on companies with strong fundamentals like good management and consistent earnings, and that are undervalued by the market. And he's patient and holds stocks for the long term to ride out market fluctuations and capitalize on the compound growth. And Warren Buffett's strategy is all about finding good quality businesses at a bargain and buy and hold for long term. So he really takes advantages of those benefits of investing in stocks for the potential for growth, holding a lot of different stocks and getting diversification benefits. It's a good hedge against his inflation. That's how he's able to sort of grow his empire and maintain his purchasing power. And if he needs to sell the stock, although he has a long-term time horizon, when he does need to sell the stock, because of the liquidity, he can sell the stock quite quickly if he needs to, even with the volume that he owns. And at the same time, by owning companies, he's been able to affect their strategic direction with the management and maintain the good management that he thinks they should have. I hope you found this video useful. Let me know in the comment section if you found this useful, and give me a like if you did. And if you like these type of videos, just explaining the fundamental basics of finance, I've got a few other videos similar to this. There's a link in the description for a playlist of other videos. So thanks for your time and attention, and keep being a champ in your financial journey. Cheers.